Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, in second video, let's take a look at the gold market. So here mostly our suggestion on the deep retracements also has been completed. So actually gold shows absolutely the same action as in the euro currency on the dollar index, and we said that after the first drop down, taking into consideration significant thrust up, some deep retracement should be formed. Besides, as we have discussed yesterday, here was the Judd Napoli bullish directional pattern that calls bullish stretch. This is the combination of the daily result that indicates of this blue line. This is the later predictor, and fib level. So when they coincide in the same area and market touches them, it means that very probable the upward retracement out of this level. But this pattern already has been done. So here we actually expect on forex market two-leg downside retracement. So on the euro currency, on the dollar index, we expect something of that sort. So after retracement up, we think that another leg down should follow. Here it is difficult to anticipate from what point it could start, whether gold will follow it or not. But since both of them, all other assets stands in relation to the United States dollar, I mean euro currency, some other currencies in the gold market, so approximately the action should be the same, but maybe in a bit different scale. But in the gold market, the appearing of the deep retracement is also very probable. That's why I think that here as well, somewhere in this area, we should keep an eye on the possible appearing of the bearish pattern, bearish reversal, which could push price lower. Many things will depend on the statistics. So today guys will be important data release, United States, or inflation and retail sales. This major driving factor right now. That's why gold probably will could show a very significant reaction. So I think that it's not really a good idea trying to anticipate the possible reversal. We need to see the clear signs and clear patterns. MACD shows that upside action comes closer to MACD predictor line, so point where the line will cross. And here we will keep an eye on the possible bearish grabbers. If we will get the bearish grabber, it will give us more confidence the market could drop, because grabber will suggest the taking out of these lows, and it's almost the halfway to the possible ABCD target. So here guys, currently in current moment, I think that we can't do really a lot of trade on the gold market, and better to wait statistics and see the reaction. Now our task here is just to wait and see for clear patterns on the intraday charts, whether market will confirm our idea of possible bearish reversal again, and whether it will confirm our idea of possible deeper downside action. That's why while we are waiting for that, I would like to show you our yesterday trade that we have planned, and personally I have traded this setup. So take a look on the 4-hour time frame chart. Currently guys, actually market has hit the XOP 1335, but depending on what data could be released today, I am not excluding the chance that market will jump higher and reach at least the 1343 fib resistance, because our prediction was really fast. Maybe until market will waiting for data, some retracement could happen here, but later in the session I am not excluding the chance that market could jump a bit more. Here guys, here how our trade has happened. Yesterday we said, when we start our discussion, we were somewhere in this area, and we said that is confluence resistance 1329, 1331, and also this is trend line. Market also has completed kind of the OP target here, and we said if you're a scalp trader, you could use this situation for taking the scalp short trade out from this resistance, strong resistance area. Here I will show you how I did this. So all trade takes approximately maybe 3-4 hours, not more. And actually I have traded these leg downs, just a single candle on the 4-hour time frame chart. For showing you, I will use the 15-minute chart. So here's our confluence. First of all, I will show you again for our time frame chart, just you to see what I mean the confluence. You can see we have the two levels, that's 1329 from the whole swing down, and the 618 resistance for the most recent leg. So they create the confluence resistance that we have used. Now back to the trade. Here's how it was taken. My entry was here, right at the spike up, because I have faded a bit entry to the target of the butterfly pattern. Because when in the point when the butterfly precisely completes, it's very a lot of rivals for taking the position. That's why it's not always you could get the good feel where you're putting the entry order above the completion point of the pattern or right at the point. That's why usually when I take in the position, I place orders slightly for taking short position, I place orders slightly below the completion of the pattern. So after that, my stop was initially 50 pips. So I have the very conservative risk approach, and I do not risk more than the 1% from my assets in one single trade. So here was my stop. As you can see, stop stands above the confluence resistance level. So if market will break the confluence, it definitely will mean that it will continue to move higher, because confluence is a strong level. It should hold the price action, because this is really a big part of our context of trading. So as soon as market will break it, it means that our context will fail. So that was my initial stop. Here, as you can see, market has moved slightly higher and starts to form a kind of the end shoulders pattern. As soon as this spike has been completed, the market drop here, bearish reversal swing has been formed, I move my stop to the break-even. My exit point was at XOP of this hand shoulders pattern. So actually this was ABC top 1618 extension. I have closed position manually because I just wasn't able to catch precisely the point when the market has tested XOP. So it was slightly above this. But major idea of closing position was the 1618 extension of this ABC pattern. As soon as market has completed it, this position has been closed. So here is how I trade this setup, scalp trade on gold market. After that, as you can see, market is continuing to move higher. So that's what I mean when I'm talking about the scalp setups. As you can see, it's usually you should trade it on the 15-minute chart, maybe on the 5-minute chart. I'm switching between these two time frames where I'm taking this trade. Usually these trades are really fast, and when you're dealing with these trades, you should not marry it to any position trade. Just trying to catch the targets based on the logical profit objectives that you have on the corresponding time frame. Do not count on some deep drop getting you the huge profit. This is retracement, guys, out from the confluence resistance. Just taking the target that you could estimate by an extension and based on the pattern that you have, and that's all. So right now we're waiting for data release, and I hope that maybe today, tomorrow, till the end of the week, we will get something on the gold market, maybe some more information, more inputs as a result of today's statistics. But again, I will repeat that here, I think that as on the dollar index, as on the euro currency, that indeed another leg of the downside retracement really could start here. This is logical based on the fundamental picture that we have right now, and based on the technical behavior that we have. So let's see what we'll get.